Welcome everybody, it's the Crypto Sniper, glad to be back with you. Yep, a short update from yours truly, the Crypto Sniper, in terms of crypto. So, good news, Bitcoin at all-time high. That's going to make a lot more people very positive. And we're also going to be talking about Binance today, and Monero, and we'll fly past XRP to highlight a little bit why we're not over talking about XRP right now, but our macro remains very, very positive for it. So let's just have a look. So we covered Monero, we covered alts recently in terms of XRP, Tron, Binance, and of course Ethereum had a little bit of an awakening as well, and Bitcoin passing 100K. So a bit of recent coverage. Let's get straight to it and cover yours truly, the big boy, who made himself into the hero again and is still leading, has to be said, 111.8, three ones, three skinny gents, 888, three fat ladies. Oh my God, three skinny gents have picked up three fat ladies and they're on a high. Yep, that's great. That's interesting. That's what it tells me anyway, up top on the charts. I don't write this stuff. I don't know why. Anyway, inside our community, we'd actually spotted that little structure and we're quite bullish, but it got a little bit interesting and sexy. What happened? Treasuries and debt markets happened. That's what happened. The worst debt market auction they'd probably had in the modern era got the stock market and risk off to get real sexy and schizo before Bitcoin did what it was probably going to do anyway, as part and parcel of this upside HVF that we had drawn and spoken about and said inside the community, which you can become a member of, by the way. Hit the link below, book a call, have a chat, and there's absolutely no pressure in terms of what we do. If it fits and it's right, we sometimes turn people away if they have unrealistic expectations. So it's an interview, it's a chat. Would this work for you? By the way, reset is here. Drama. Reset is here. The debt market's in collapse, but it's not all bad news because, and I'm going to cover this in terms of convexity, and I'm going to cover this in a real way. What tends to happen when this sort of event occurs is the following. Debt markets collapse. Everybody goes, we don't know much about that. We don't worry. It's the foundation of your financial system. So the equity markets thinks, well, we don't have to worry. Money comes out of debt markets, goes a little bit into equities. You will worry, Mr. Equity Market. It is coming for you. The buy the damn dippers on the equity market are going to get rinsed. And the nice thing for crypto and gold is they represent alternatives to the financial system. And when you have true alternatives to the financial system, gold as a reserve asset, Bitcoin is posturing as the digital reserve asset. And of course, crypto, the new way for money. Isn't it nice? We had this parallel running horse as our donkey was getting exhausted and running its way flat. That's right. All coming about the debt-based crisis. One of the first things you'll hear us say in every interview. And what that means, it leads to contagion. It's going to be housing down, lots of things down, lots of jobs in real estate, etc., contagion. And actually, the bad news is everyone is expecting a wave of cuts, which will create stimulus. But actually, the Fed can't move because it can't just go brr. Everyone just goes, yeah, but Fed go brr. What that means is they issue debt to offer money to other people. So those takers of the money have borrowed money or been provided money, and somebody sits with, hey, you're paying me back at some point. Now, when the debt market collapses, nobody wants to be the guy that's lending money that's on the other half of the T-bill. It's very important that people understand this, because you can't go brr. The reason you could go brr at the bottom of COVID is everybody ran out of the equity market. Everyone ran out of crypto. Remember, Bitcoin, 4K it traded as part and parcel of that. And what actually now happens is you're in an environment where that's no longer possible. You don't have everyone running out of every market wanting to get debt instruments. It's not happening. Why is it not happening? Because there is no desire to have debt. It's no longer a feasible asset. And as a result, no one is prepared to buy it. So the key aspect to all of this is if nobody demands debt, it becomes harder to issue. Rates have to go higher to tempt people in. And people will say, well, the Fed will buy it all. Well, they've already been doing that, intervening and buying some of the debt. If you cut rates, that increases the price and valuation on a fake phony bond market, and they have to chase up and buy ever more as less people see it as a value proposition. And this is happening across the board. It started with America. It's gone through all the Western nations, including Japan. This is the end of the debt-based system, guys. Potentially very good for crypto, not good for most people. Let's go and have a look at a tweet we did on this. So I want to show you something right here on a chart that we shared. This is under the market sniper. It applies doubly for the crypto sniper. You can see we were talking about it here as well under the crypto sniper. The currency will devalue immensely. So typically what happens when you are first starting a debt-based collapse is the debt collapses. That's what's happened in 2020, late, when we called it in the Market Sniper channel, September. You fell 50% on TLT, which is long-term debt valuations. The valuations fell by 50%. What then happened, dollar was pretty consistently strong because American rates were high. Then the debt's been bobbing around at these levels, and then the dollar fell. The dollar fell, so they take turns. Remember, a UST and a USD go hand in hand. You borrow money into existence. There's a debt instrument and a fiat. And they take turns in going down. Eventually, which is the point of this tweet that we are sharing with you right here, eventually what tends to happen is you get to the steepening in the curve. The steepening in the curve is roughly where we are right now. Let's share that image a little bigger so that you can see it. The steepening of the curve is the point of convexity. Credit and credit valuations, street cred as an asset value is starting to disappear. After the Volcker highs, he reinstated credit as a serious instrument. It started to get worked off with the ever greater borrowing. But that was slow. The cred loss was small compared to where it started. What's happened since with the events of subprime, it started even with the dot-com, obviously Greenspan, a big criminals, allowed liquidity to get out of hand, is you eventually are in a point where you're going more down than across, where this represents time, and you are now in the point where it is 2 minutes to midnight. That's where we are in the debt cycle, and what tends to happen is the fall away is sudden. It's a bit like bankruptcy curve. Slowly at first, you're not quite got your finances right. More's going out than you're making in sales, and then things continue to go badly, and the trend is not your friend, and then things escalate. That's bad positioning, catching up with you, paying too much interest on debt where you borrowed from the first time something went wrong. It gets worse and worse. But what tends to happen is you have the quickening phase, and you are here for the quickening phase. So what's going to happen during the quickening phase, and I'll tell you why this is good for crypto and gold, is that debt devaluation accelerates. You're starting to see that long bond rates, all the interest rates going up, which means the debt value is going down. Remember the seesaw. And also simultaneously, instead of left, right, first debt goes down, then currency goes down, then debt goes down a bit more. They start to run until they are coinciding together, and your money buys less and less, and it seems out of nowhere. Everything costs a massive amount more. It seems to, within a very short time frame, an absolute acceleration in the cost of everything. Milk, bread, this. And they'll make an excuse. Oh, there was a flood. That's why there's less coffee beans and there's less this. Oh, there was this. Oh, there was that. And there'll be global weather crises for everything you eat everywhere. Oh, there was that. They killed all the birds. That's why chicken fillets are going up, etc., etc. But in actual fact, you are going into this acceleration of loss of buying power in your fiat with the debt. And what tends to happen is anything that is long-term perceived as a hard asset, gold, and the new system for the financial that is going to replace the dying donkey, which is the digital realm of crypto, starts to go up in the exact opposite way. So you are getting the adoption curve, or the usage is the exact opposite. Let's draw it a bit better. Standing on my toes, you tend to do that, which is the exact opposite of that. So you are going to go towards a parabola phase to the upside in gold. So some people say, but gold's already gone up a lot. It's barely begun, guys. Let me say to you, it's an almost certainty that in some form America will default. It's mathematically impossible to make these interest rate payments, and the interest expense is getting higher. And there's the better part. Some say 7.5, some say 9 trillion. That all has to be rolled, plus all the over expenditure of this year. Debt-based crisis means that rates can only go higher because no one wants to buy the stuff, and they need to devalue it. That's going to kill the economy. It's also going to expose all the equity companies that loaded up their balance sheet with debt. It's going to kill housing. You won't be able to buy with debt anymore. No one wants to lend to anybody unless you have 50% deposits or even more, and you can afford a 10% payment. That is what could happen and come about. And we are in that acceleration phase. So let's take it back to some of the charts we were looking at. Bitcoin will have a natural bias to the upside, and this is what we're seeing. This is not a melt-up moon. This is quite steady. It's quite feasible and plausible for a crypto that's going up like this to continue for a long, long time, and then still much higher up have a melt-up phase that goes up. So we are back in a very bullish space. Don't forget, we've had a lot of dollar devaluation. But we're likely to get more and more. So it's looking rosy for Bitcoin. Let's have a look at Monero. We've spoken a lot of times recently when we were showing you the charts and the previous YouTubes of what we've been doing with Monero. We said this would be a key breakout. In actual fact, this was the triggering event at 242, a run to a target at 3674. 242 to 3674 is some multiple. Oh my goodness, smells like about 12 times to me. Even from here, you've just gone 400, by the way. You're not long Monero enough. You're not long Monero enough. By the way, when we were talking about it and it was breaking 244, 270, 280, This is a strong performance, 370. You know, even at 364, that was a 10x from here. You've now gone 400. How much is the percentage to make the upside target potentially? Let's have a look and see. 816% from there. Let's have a look from down here. How much was the percentage from the just-in-time entry all the way just to target? That would have been 1400%. So I think we've spoken about that a little bit before with you, Monero, and that's your update. A very strong outlook for Monero. But, you say, what about XRP? We're macro bullish XRP. Right now, it's not the one that's got the best fundamentals. That said, it's still in a steady climb, and we've just had what some would call a little shooting star and a little hammer. We call that you wait for it, kettle drumsticks. That usually occurs when there's a little bit of a squeezing of the volatility, so it could continue to inch up, but its macro setup, its super macro setup is very bullish. You know our call where we are with that, but its medium term setup is not particularly great at the moment. It's not bad. I think it's going to walk out to the upside. I just don't think it's going to be the biggest performer right now. You've also had, let's get it up, crypto market cap and see the percentages. If you do for the day, oh my God, you got all these weird coins. Let's do the 7-day. You can see Monero is right up there in terms of all these others. Trump coin. Yeah, there's a Trump coin trade. We had it in our community. You missed out on it. It's still there and it still can go higher. I suppose I'll show that to you. I wasn't expecting to, but I will. And Monero, 17%. You can see, and also the biggest by market cap, I would suggest this far up, apart from you're at 7.3, you've got Hyperliquid market cap at 10.7. So that's one that has slightly larger than Monero. Then you have to go quite some way before you see any of the bigger tokens. Here's Bitcoin at about 20, which given its size still shows you the dominance that it's showing in terms of the recent performance for the 7 days. Okay, so good on Bitcoin. Very good on XRP, on Monero XMR. A little bit underperforming, if we, to be frank, on XRP for now, short term. Let's just go back to market cap. In fact, it slipped a bit on Ethereum, which has gained quite a bit more over the last 7 days. And BNB is actually catching up a little bit and is getting up to that 100B mark, which is where we're going to next. So, as we warned some time ago, it wasn't clear how crypto was going to react. Was it ready for risk off to go up? Actually, it's shown relative strength in the bond market collapse. It even showed some relative strength as the equity market collapsed, which has since bounced back some way. In some instances, largely, not entirely, but largely. Watch out, equity guys. The bond market is going to make it your problem. It's the foundation of the financial system in the traditional realm, especially with all those borrowings on equities. But what you subsequently got, you ran the first interim here. You've got a setup over there. You've kind of supported out just through the first interim. So once you've run through the first interim, you're seeing wicks, hammer, and now you've broken out, which is going to suggest flag continuation, and we have the next interim in and around the 750 level and a target at around 868. So in terms of risk reward, this was a 6.62, and we even pointed out that last time we covered this, you could have got long there and put a stop under there, and you would have had a slightly better risk reward at about 7.62, but you were late. In fact, if you were early and you were prepared to take that extra risk, you would be sitting on around, well, let's clean our face, around 8.8, 8.08, let's just say, let's get that correct. So Binance looking good as well. As we said, at one point it was looking like this could be downside. It's not about being right, it's about making money. And the minute it showed us it's not going to be a downside, it's probably an upside. So now we draw it the upside. It's important to highlight that dexterity. We were thinking, hey, if this is going down, this could be a real good one for going down. Okay, we're not going down. Dollar keeps going down. Crypto holding up. Okay, if you're up, how far are you going? We'll trade you to the upside. So we don't get married to a particular viewpoint for up or down or hating on a particular token. Still rated as the safest exchange. If this is a crypto bull market, many retail traders will be using it. And of course, there's the BNB chain on top of that. So there could be any number of reasons that it could do rather well and have a little bit of catch up. So we've covered with you today Binance token, BNB. We've covered with you XMR. We've also covered with you Bitcoin. Now we had a little walk past and we saw that there was a certain Trump token. So we'll get rid of that silver chart and go TRUMP and cover that one for you for a bit of, I almost want to say, laughs, not too serious. We don't get too serious, but we will point out technical setups, and they do occur. I personally, if you're asking my view, this is an enrichment tool for Trump and his stooges. A foreign nation wants to hand him money, a bung for bringing business and signing it all off, a special way. They go pump his token. There was one particular crowd, Asian, I think it said they were going to invest 300 million in Trump token. There's nothing investable about this thing. Okay. It's obviously, if you put 300 million, you're going to move the needle in terms of the upside trajectory. And that's likely to lead to a bit of dumping from the insider holders that currently hold it. And that's how they can manifest a nice little bribe their way for business duties served. In other words, a little bit of an enrichment tool, one might think. And there's so much cacocracy right now, guys. There is absolutely so much skullduggery in terms of any form of integrity in the political system. We don't even have to get into the Saudis buying a Air Force One new plane or anything like that. It is just bungs and insider trading. And it's not just Pelosi and the gang that got their noses in the trough. So here is the target. We see a 19 being run. It's a technical target. And it's also the first inverted structure after a long period of coming down. So they all rinsed and sold out quite strongly. But the tool still remains available. And of course, with lots of people run out, it's easy to pump it again when it's near a low. And this would be the first in a new trend, which means it could surpass the 19 to the upside and go even further. Interesting to note, it did make the first interim and get rejected properly for a return move in both instances there. Even that hammer had a little look back, and now you're going back up again. A little bit of a rest, but we would expect the next rest on the run of the 16.25. You can see it in purple before the 19.9. 19.19, isn't it? I would still expect that further upside could follow, though, as the investors, the foreign nation investors, learn how to pay the bungmaster in chief. That's my take anyway. You can have some fun and tell me, what do you think the whole reason for there being a Trump coin is all about? Who knows? Oh, don't forget, there's also Melania one and others, etc., etc. Anyway, so that was your DGEN watch this token opinion that we've thrown your way, and why not get in front of it and sell before the Trumps do to get the upside. By the way, not a recommendation for investment. These people will control it wholly. The only reason we'd even look at a bit of fun on this is a little bit of DGEN, a little bit of money-making opportunity, and a good quality HVF. That's what makes life work for us. Good quality HVFs with asymmetric upside rewards worth super tight risk on the downside. Watch and learn. By the way, there's a free mini series for you if you're not ready to book a call. Don't forget also to subscribe on the channel. And that was your update on Binance, Monero, Bitcoin itself, and a little bit of a degenerative idea for further upside in the form of Trump token. We think it will go beyond the 19.19, maybe after a little bit of a rest. Okay, till next time, we'll talk to you more. Thank you for liking and sharing. Catch you later. Bye.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.